What if you could see, plain as day, when a CEO bets millions of their own dollars on their company? Or what if you could see when they're quietly selling off their shares? Well, today, we are doing just that. We're following the smart money to decode one of the most powerful signals in the market, the trades of company insiders. Let's dive in.
Think about it. We are absolutely drowning in data. There's endless news, nonstop social media chatter, analyst reports coming out our ears. So in all that noise, how do you find a real signal, a real edge? What if that signal came directly from the people who know a company better than anyone else on the planet?
And that very question brings us to our first section, the hunt for an edge. We're going to look at a signal that comes straight from the boardroom, straight from the C-suite itself.
Just imagine for a second. What if you could peek over the shoulder of a CEO as they manage their personal finances? See if they're buying more of their own company stock, or if they're cashing out. Well, here's the thing. You don't actually have to imagine. Because of transparency laws, a lot of this data is completely public.
Okay, now let's be crystal clear about something. When we say insider trading, we are not talking about the illegal kind that gets people thrown in jail. We're talking about something totally different, legal, reported insider trading. This is when executives, directors, and big shareholders trade their own company stock. And, this is the key part, they have to report it publicly to the SEC.
So how does this private decision become public info? It's actually pretty simple. An insider, let's say a company's director, decides to buy or sell some stock. As soon as that trade is executed, a clock starts ticking. They have just 2 business days to file a specific document, called a Form 4, with the SEC. And boom, just like that, their private trade is now public information for anyone to see.
And this is why so many people pay attention to it. As MarketBeat puts it so well, tracking a company's insider trading activity is an effective way to identify management's true outlook on the company's future growth and prospects. You really can't get a clearer signal. They are literally putting their own money on the line.
So we know the data is out there. It's public. But how do we actually read the tea leaves? What do these signals mean? Well, in this next section, we're going to decode some of these signals using some real, recent examples. All right, so a single insider buying some shares? That's interesting. It's like a little whisper. But the real signal, the one that really shouts, comes from the patterns. When you see several key executives all buying stock around the same time, that's what we call a cluster buy. And that is a signal that gets a lot of people's attention.
And here is a perfect example from Biohaven. Look at this. On the exact same day, you've got the CEO putting in $5 million and 2 directors dropping $25 million and $3 million, respectively. Do the math. That's over $30 million combined. That is way more than just a vote of confidence. It is a powerful, coordinated message that the people at the very top believe something good is on the horizon.
Okay, so buying seems pretty straightforward, right? It's a sign of confidence. But what about selling? Well, here the story gets a little bit trickier. An insider might sell for dozens of reasons that have absolutely nothing to do with the company's health. They could be diversifying their portfolio, buying a new house, paying for their kids' college, who knows?
But just like with buying, the pattern is what really matters. A single sale can just be noise. But look at this example from Atlassian. We see the president, the CTO, the CFO, and the chief accounting officer all selling significant amounts of stock on the same day. Now, it's not definitive proof of anything, but a coordinated sell-off from the entire C-suite, that is a signal you just can't ignore.
And get this, it's not just about the company's own executives. These same reporting rules apply to major shareholders, and that includes some of the most famous and successful investors in the world. When these super investors make a move, you better believe the market is watching.
For instance, check out this filing. This shows Warren Buffett's legendary firm, Berkshire Hathaway, selling off a multi-million-dollar stake in the company DaVita. This is an incredibly rare public glimpse into the decision-making of one of the most successful investment firms on the entire planet.
So we have these really powerful, specific signals coming directly from insiders. But here's a really crucial point. These signals don't exist in a bubble. To really understand them, we have to zoom out and look at the much bigger picture.
It really helps to think about market clues in 2 big buckets. On one side, you've got your micro signals, things like insider trades that tell you about one specific company. But on the other side, you've got these huge macro trends. These are the massive, economy-wide forces that can lift or sink all the boats at once. And insider buying is great, but if they're sailing into a hurricane, well, you get the idea.
And right now, the macro trends are absolutely huge. We're seeing this massive explosion in AI investment. There's all this uncertainty swirling around global trade and tariffs. And of course, every single person with money in the market is watching the Federal Reserve's every move on interest rates. A strong insider signal is fantastic, but it still has to operate in the world shaped by these powerful forces. All right, so we've got the micro signals from the insiders, and we've got the macro trends from the whole economy. In our final section, let's talk about how to put all these puzzle pieces together.
And here is probably the most important thing to remember through all of this. None of this data is a crystal ball. There is no magic signal that's going to tell you the future with 100% certainty. The real value here is using all of this information to build a more complete picture, to ask better questions, and just to become a more informed, more critical thinker about the market.
So, what are the big takeaways? First, insider trading data is a powerful, public signal of what executives are really thinking. Second, don't get lost in single trades. Always look for the patterns, those cluster buys and sells. Third, always zoom out and consider the macro trends. And finally, remember this is just one tool in your toolbox. Use it to build a smarter, more complete investment thesis.
And of course, the obligatory but very important disclaimer. This information is for educational purposes only. It is not and should not be taken as investment advice. You should always do your own research and consult with a qualified financial advisor before making any investment decisions.
At the end of the day, all this data offers us are clues, not certainties. It's about gathering evidence to build a better case. So the question we'll leave you with is this: what clues will you look for next? Thanks for tuning in. And hey, if you're interested in exploring some platforms to track this data for yourself, we've put links to the current sign-up promotions for Webull, Moomoo, and Public right down in the description below.